Welcome back. This is Open Exchange, and we are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, we're going to be getting the pre-open rates in just a bit, but for the timing, let's get in our tech guest, Shrikant Chauhan, as well as Kush Bora joining us. Good morning, gentlemen. Thanks so much for joining in. Well, Shrikant, you go first. We're starting a new series. How do you approach the index? And if you want, you could fill us in with your picks as well immediately.
Yeah. Good morning, Nigel. I think, the Nifty is very clearly indicating us that it is heading upward. It has spent a lot of time close to 16,900 levels. And on Wednesday, when there was a monthly expiry, we saw the markets were closing at the highest point of the day. So while looking at the entire pattern, I think we are heading for at least the levels of 17,200 or 250, where the market is having resistance of 20 days simple moving average. So that is what we are seeing in the near term. For the Bank Nifty, the important level is 40,000, and above that, the next level to watch out for would be 40,300 or 400. So broadly, we are of the view that we should be buy even at current levels, and if there is any correction.
Kush, what about you?
Yeah, hi Prashant. On Wednesday, I made a case for a near-term bounce in the Nifty. I'll add on a couple of factors to that today. See, globally, Dow has closed above a downward sloping channel, and Nasdaq 100 has entered a technical bull market after 3 years. So some positive rubber from the global markets. Back home, as Shrikant just said, 16,900 has been defended multiple times. And FIIs being 91% short, in fact, makes a very strong case for short covering. So I too would be bullish on Nifty, slightly more optimistic than Shrikant. 17,300 is where I see the Nifty. 16,900 would be my stop loss. Bank Nifty already above its 200-day moving average, knocking on the doors of 20-day moving average. 40,500 is my target on the Bank Nifty, and 39,700 is where I would place my stop loss.
Okay, got that. What about individual stocks? Since both of you are bullish, Kush, what would you be looking to buy and sell this morning?
Well, the list is long, but I'll restrict myself to two. Power Mech, this is one of the stocks that has been doing rather well. 2370 was a resistance zone. The stock has crossed and sustained above that. So 2460, the 52-week high is where I would place my target. 2370 would now be my stop loss. Grasim also very similar, has been doing well, has been rising in a weak market as well. So 1650 is an immediate target. 1620 would be my stop loss.
Okay, Shrikant, your stock picks?
Yeah, Prashant, I think on Wednesday when the recovery was there, we saw specific recovery in almost all the banks. And in that, Axis Bank did really well. It closed above its previous high. And the entire pattern is suggesting us that it is heading for the levels of at least 860, 870. So it's at current level, it's a great buy with a stop loss around 835. We also like Reliance Industries because there also we saw good amount of resilient activity around 2200. From here, again, the stock can move to the levels of 2300 or 2350. So both are looking good at current levels to buy and hold.
Okay, all right. Thanks a lot for that, gentlemen. Well, let's get in Chandan Taparia as well, derivative and technical analyst in Motilal Oswal Financial Services, who joins us on the show. Hi, Chandan. Good morning. What are the strategies you have for us?
Good morning, Nigel. Thanks for having me. So finally, this is the last trading session of this financial year. And on last day was the expiry, and we have seen some data setup which are slightly on the positive side if I combine all the market internal. So on expiry basis, Nifty index is down by 2.5%. Rollover is near to 73-74%, and open interest added by 20%. So some shorts are carrying into the Nifty index from March to April series. But in the Bank Nifty, the story is slightly different. We have seen huge open interest addition of around 80%. Bank Nifty started the March series at OI of 28 lakhs, and now it's near to 50 lakhs. So 80% open interest addition and 93% rollover, while no major change in the Bank Nifty on expiry to expiry basis. Last series settled at 40,000, and we are just 100 points lower than the last series closing. So Nifty is slightly negative, but Bank Nifty is giving mixed cues, and any small trigger can open the further short covering leg in the Bank Nifty index. So looking at that instance, we believe that hold of 39,500, 39,750 is important for Bank Nifty, and this momentum can take it towards 40,500. Similarly, in the Nifty, recent bottom of 16,800, 850 could act as a major level to drive the move towards 17,200 to 17,300 zone. FI's long short ratio is near to 9%, that is near to oversold. Important part is your VIX is at 12 days lower level. So decline in the VIX, jump in the PCR, oversold FI's long short ratio, some positive support from the Bank Nifty might see some change or the bullish days ahead. Now talking about trading ideas, first is buy on Ultratech Cement. in last couple of days, we have seen that selective cement stocks are doing well. Most of the cement counter has seen the long rollover with built up of long positions. And this stock is one of the strongest setup, which can give the movement of 3 to 5% on immediate basis. So recommending to buy on Ultratech Cement, which has seen the rollover of more than 90%. One can buy with a stop loss of 74.50. The stock has potential to head towards the next call writing hurdle of 8,000 marks. Second trading idea, that is buy on Indian Hotel. Again, margin of safety is clearly visible. Positive to range bound bias. Every decline is being bought. Long rollovers are intact here. So recommending to buy on Indian Hotel with a stop loss of 313. Here we have potential upside to us 338 to 340 zone.
All right, thanks a lot, Chandan. Have a good day. Well, let's also talk about some stocks that are have momentum going for themselves. Ekta's here to give us the list. Ekta, what's on your momentumizers radar today?
Well, one of the stocks on my momentumizer list today is Zydus Life from the pharmaceutical space. Overall, the entire pharmaceutical index has seen a lot of momentum this week, but Zydus Life stands out because the stock is at a fresh 52-week high and in fact saw 50.56% of delivery quantity on Wednesday. If you look at the stock, it's seen a strong rally of over 50% from its 52-week low, which it had hit in May of last year at levels of around 319 odd rupees. Now, the fundamentals seem to be stacking up for Zydus Life because drug approvals seem to be picking up for the company. The recent approvals include the generic version of Imodium in the US markets, and another drug, an injection for hormone deficiency, as well as tablets for depression and anxiety. So from the US FDA approval front, there have been a couple of approvals which have picked up for the company. And separately, there was a recent inspection for their Ahmedabad facility where the company was only issued around 3 observations. So the larger pieces of news seem to be stacking up well in terms of momentum for Zydus Life. Lastly, where is it trading? At around 18 times FY24 estimated PE, which is largely in line with its historical averages.
Ekta, thanks very much for that. You know, I just want to make one point. I was the FNO, Chandan was there, the technical guys were there. The point that there was perhaps is going to be a recovery, I think it's getting, we're hearing it more and more, right? Yeah. You guys remember what happened a month, not even a month ago, 15, 20 days back. Positioning was extremely bearish. And it looked like it was all indications were there that we will get a big bounce, right? It did not happen because SVB, exactly on that Friday it happened, when the collapse happened. Maybe this time, you know, we won't get a derailment because globally things are looking a lot better. I'm just looking at a IIFL note. I'm seeing, so they're saying that we expect a 5% rally in the Nifty, 7 to 8% rally in the Nifty, Bank Nifty to see about a 7 to 8% move. That is this expiry, the new series. And they've given a long list of stocks which perhaps are the most compressed on the short side and which may see a short covering rally. My only worry is that, you know, when everyone kind of gets on one side of the trade,
the market doesn't
it becomes, it kind of fizzles out. So let's hope that that's not the case. Yeah. To be fair, last time you had these global issues and the bank issues there, so it kind of did not go anywhere. Things are looking much more constructive now.
You know, Prashant, I wouldn't mind the Nifty doesn't go anywhere, but the breadth of the market improves because that's where the real pain is. And I'll tell you, historically, April has been a better month for the broader markets in comparison to Nifty. So more than the headline index, I think, you know, portfolios have got absolutely rogered. So you'll hope that there is a recovery out there. But take that point, heavily net short, hopefully no incremental negative news comes in, then you can brace for a bit of a short covering bounce. But we've spoken enough about that. Let's get in Karan Taurani of Elara Capital, who joins us to talk about the media space and particularly Zee Entertainment. Hi, Karan. Good morning. Thanks so much for joining in. Karan, you know that IndusInd Bank issue has been sorted out with Zee. Do you expect the IDBI Bank issue as well to get sorted out? And Zee Entertainment stock has rallied close to 10% in the last 1 month or so. You expect further upside from here on as valuations are still comforting?
Hi, Nigel. Good morning. Pleasure to be here. If you look at Zee as a stock, I think there was a big overhang in terms of the merger not going through, and that was after this NCLT insolvency plea which had come in. The stock had bottomed out towards 170, 180 levels, and it was trading at compelling valuations. I think post that in the last 1 month, it has moved up close to 25%. And I think the only NCLT overhang right now is with IDBI Bank, and that's to the tune of almost 150 crores. Now, once that settlement happens, I think the NCLT merger approval should come in anytime soon. What we are hearing right now is that the next merger hearing is on the 13th of April. And if at all IDBI is settled before that, the NCLT merger approval might come in on that date. If not, then the hearing will again get pushed. But the broader assessment is that I think it's a 4 to 6 week process. Probably could take that the IDBI settlement could happen.
Okay, the next big trigger that all of these guys are looking forward to is the pickup in ad revenues, right? And you have big events now. There's the IPL coming back. Ad revenues for broadcasters have been under pressure for a while. Do you see any change come through? And how do you see names like this progress, Z, etc.?
So I think ad revenues generally have been under pressure, and that will remain this year. So we are not seeing any positive signs of recovery for now. I think around festive, around October time, in probably Q3 FY24 is when we could see some sort of a recovery. Even if we speak of this quarter specifically, I think the numbers are quite weak. So if you look at TV as a medium, they had recovered to 95% of pre-COVID last year, in F22. And this year, they're again back to 85, 87% of pre-COVID levels. So they've actually come down by 10 to 12% as compared to what they were last year. But I think looking at IPL, there is no impact as such, on Z. IPL is, going to more have an impact in terms of, Jio Cinema and in terms of Star.
Karan, the worry at the margin is that will someone else at some point stand up and say, well, we are also owed money? Is this the end of the wars if all this is paid back, or you think there could be something unexpected between now and the fruition as far as that merger is concerned, the approval goes? Any thoughts at all?
I think this is largely the end of it. So if you look at the process since the last 1.5 months, the process has moved at a very fast pace, thankfully. And I think once IDBI comes in, once the settlement happens, or once the final outcome comes, in terms of what happens with the IDBI bank, I think within the 4 to 6 week window, we could get the merger approval. And from a valuation standpoint, I think the stock looks to be reasonable even right now after this up move, what we see in the last 1 month. So just to give you some perspective, after building in that 11,000 crores of cash, what Sony is going to infuse, and after putting in merger synergies of close to 5 to 600 crores on the pad, the valuations are now trading in the range of somewhere around 9.5 to 13 times, P. The range is basically primarily because we have given zero valuation for the OTT business for now. So if you exclude the losses of the OTT business, the valuations are about 9.5 times. And if you include the losses, they are 13 times. So in both the scenarios, I think there is a good amount of potential upside because, because of the synergies, because the entity becoming so large, we do see a potential of this entity trading at close to 70 to 18 times P.
Okay, all right. So big re-rating possible. Now, Karan, just a quick response to, I want to ask you, since we have you on Nykaa, it's down almost 9% this week. Reliance's beauty business launches next week, as we understand. I don't know if Nykaa is under pressure ahead of that or other issues. Any thoughts? It's almost at a new low.
Yeah, I think Nykaa definitely there has been some pressure in terms of growth, and that's been across all discretionary categories, whether you call it alcohol, whether you call it QSR. Similar has happened for Nykaa as well. So broadly, in terms of numbers, I think this quarter the GMV could have some amount of negative surprise because the competitive intensity this quarter has also moved up. There have been players like DMart and Zepto, which have come aggressively in the personal care space, and that's where Nykaa is actually trying to make inroads in a very big way. But I think, looking at the competitive intensity, I think, yeah, definitely that is going to have a negative impact in terms of growth rate, but no change as such in terms of our estimates because we've already factored in 25% growth rate for the online BPC segment. If at all the growth rates move below 20%, then I think it's a big worrisome sign. Otherwise, for Nykaa as well, I think at 125 levels, I think it's very much priced in.
Okay, thanks a lot, Karan, for joining in. We have a market opening now, so we'll take your leave. Well, let's also talk about SBI Card and why it could be in focus this morning on the upside. Abhishek is here to give us the latest. Abhishek.
Well, Sonia, Jefferies has initiated on SBI Card with a buy recommendation and a target price of 900 per share. So they say that the strong franchising credit card is seen in SBI Cards. They estimate 23% CAGR in spends over FY23 to 26, led by the fact that SBI's large customer base will help, and the white co-branded card tie-ups will help SBI cards grow. So net interest margins should bottom out in H1 FY24, and they should improve over FY24 to 26 as the revolver mix. Now by revolver it means overdues of more than 45 days. That mix slowly inches up and rates stabilize. So healthy profit growth and 23% plus ROE, that is return on equity, is expected over FY24 to 26. The recent underperformance versus Nifty is largely led by the fact that there are NIM concerns in the company, and the key risk is threat of potential new entrants like Bajaj Finance and higher spends share by UPI. That could be a key risk. However, they say that the rise in revolver mix and the peaking out of rates are the key positive triggers for SBI cards. Back to you.
And I think after, Abhishek, thanks very much. After last week's announcement on the PPI, UPI charges, etc., it's being seen as a relief that every time SBI management comes, SBI card management comes, we ask them about concerns around MDR, will there be a cap, etc. That concern perhaps fades away a little bit. That's not the direction that the regulator, the government, etc. is thinking on. And I think that is a big one. If that uncertainty goes away, at least that's the reading at this point in time.
Okay, well, the market looks like it's going to open in the green, so we're all set for that. It's a 120-point opening that we're expecting for the Nifty, and lots of stocks in focus. So let's get straight to it. Here you go. The first tick on the index is a bright shade of green. 150 points on the Nifty, almost 500 points on the Sensex, so looking very good. The mid-cap index also up about 0.5%, and the Bank Nifty is up about 300 odd points. Some big movers in trade. Adani Enterprises up about 3%. Nestle India is up almost about 2 odd %, and Reliance Industries is up almost about, I think, 2%. The company has now initiated the process to demerge the financial services business, and it will be eventually listed both on NSE and BSE, which is Geo Financial Services, and the street likes that. Monetization of its assets up almost about 2 odd %. Positive for stakeholders as well. Tech Mahindra is the other one. In fact, all IT stocks, Tech Mahindra, HCL Tech, TCS, Wipro, Infosys, all in the green. So that pocket is batting for the bulls. You also have the IT earnings coming out from the 12th of April. So ahead of that, perhaps you could see some buying, you never know. On the downside, though, few and far between. Coal India, Asian Paints, ITC, Divis Labs, just a tad bit in the red. Nothing alarming, but it's a really strong market. And plenty of stocks in the broader market as well. There's an order win from BEL. That stock is looking good. There's an order win from Maharashtra Seamless. That stock is up and about as well. So a lot of news-based information. And other than that, a strong opening. 17,250 almost being conquered now.
Well, solid opening, Sonia. And both the Nifty and the Nifty Bank have crossed the 20 DMA to kickstart trade. So the Nifty is trading about that 17,220, which is very, very good news. And the Nifty Bank as well, now 250 points above its 20 DMA. It's already crossed the 200 DMA. Now it's conquered the 20 DMA as well. A few stocks that are in focus. Lupin, the Pitampur Unit 2, the US FDA has issued Form 483 with 10 observations. So that stock, in fact, is down close to around 3%. Oro Pharma and Cipla, they've got the HIV prevention drug license. So both those two stocks, I think they opened up mildly in the green, and they're holding with some gains. Bharat Electronics have got an order from the Defense Ministry. They've signed 10 contracts worth around 5,500 crores, so that one's done pretty well as well. JSW Energy, well, we were probing the management about their renewable energy portfolio. Mitra Energy had to come into their fold, and now they've completed that. It's got delayed for a few months or so, but now it's completed, so good news coming in there. Jain Irrigation, international business sale, the merger that they had announced earlier, that's getting completed, and because of that, the net debt comes down by more than 40%. And post the merger, the company will release corporate guarantees worth around 250 crores. So good news on the whole. That's why the stock is up close to around 5%. Maharashtra Seamless as well. They won an order close to around 540 crores for supply of seamless pipes. So that stock holding with a gain of around 2.5%. It's a good start. You know, the bulls will be hoping we can stay at these levels because that will be important. But very, very important, I think, let's pull up the Vedanta stock. There's a large trade that's taken place out here. Vedanta, you know, close to around 0.5% to around 1% has taken place. More than 1 crore shares, I think, out there. So just keep an eye out on that one. We'll wait by to see what are the parties. Remember, we have asked Mr. Anil Agarwal numerous times whether or not he'll be selling any stake. He has denied it for the last couple of times. So let's see who are the parties to this large trade as well. Prashant.
All right. Well, 174 points, 172 points on the Nifty as things stand right now. And this is definitely a very good outcome to begin the day. But this is the beginning. I mean, the closing will matter equally importantly. A good start, which can be sustained, is even better. The Sensex is up 600 points. and both the Nifty and the Bank Nifty above their respective 20-day moving averages. As we highlighted, that is a sort of reversal level, the first near-term reversal level above which, once the market starts to trade consistently, more confidence starts to come back. Now, a few other names which we can highlight, which are moving around. So I think Jain Irrigation is another 5% higher. There's news flow there. NDTV is coming up with about a 5% pop. I just want to look at the Adani Group stocks as well, because on Wednesday, the Adani stocks all did very well after Tuesday's sharp cuts. Transmission is up 3%, Enterprises is up 5%, Green is up about 2.6%, Power is up 5%, and so on. So Adani Total Gas is up about 4%. ACC and Ambuja are up about 1.25% as well. As I have repeatedly said, this is important from a retail HNI kind of risk sentiment, and that remains the case even now. And the stocks are doing well. So far, so good. Apart from the NDTV pack, Nitco Tiles, I mean, smaller names, Andhra Sugar, I can spot a few other of these names which are coming up with gains. On the downside as well, a few names, but nothing very large or nothing very spectacular apart from what we've already mentioned. So we'll come back with more names in a bit from now. Okay, I think maybe we can look at 8:1, by the way, is the advanced decline ratio. So things are looking very good. BEL is the big gainer in the broader market. It's up 6.5%. And this is a name that we were talking about earlier. Vivek had put that out. This clearly is the stock of the day, stock of the moment at least, with a flurry of orders coming in the last couple of days, and basically meaning that their guidance for FY23 order intake is a beat. BDL is up 5.25%. That is Bharat Dynamics. That's another defense name. So it's a defense, is it a defense day? Garden Reach Shipbuilders, it looks like it. Garden Reach Shipbuilders is up 7%. So that's a sort of shipyard which caters to the defense sector. Cochin Shipyard, again, the large defense exposure, 6.25% on Cochin Shipyard. And I think all of this coming up on the back of the orders which BEL has got in the last 3 or 4 trading sessions or so. Shriram Properties, I think, is the other one, which is coming up with about 8.25. There was that big block deal which had happened. It's up 8.5% at this point in time. So, yeah, I mean, it's a good-looking screen. As I said, 8:1 is the advances to declines ratio.
Just one more stock, that's popped up is RVNL. And we've been talking about that ad nauseum, right?
Yeah.
As to how RVNL has bagged the Vande Bharat order. So this morning, the company has now received the letter of award, the LOA, from the Ministry of Railways. So RVNL will not only be manufacturing, but will be maintaining the Vande Bharat train sets as well. Just to put it into perspective, this stock was 30 rupees last year, and it's almost 70 rupees now. So it's had a really smooth run. Since you were talking about, order wins, just wanted to mention that.
Well, before we go to Mihir Vora, just one more point, guys. We were talking about the Nifty could probably end for the 4th straight month in the negative. If we can go up by 50 points from you on the Nifty, we'll avert that. We started this month at 17,303. So if Nifty can build on 50 points from here, that 20-year record stays intact. So let's see whether or not that does. Just a few sessions ago, it was done and dusted that we're going to have 4th straight month of negative returns.
Dhakka do thoda. It'll happen. All right, 175, 17,255 is where we are at. But defense is clearly the name of the game, at least this morning. And that's showing up everywhere. Large gains, 5-7% across that defense pack. Our market master of the day is Mihir Vora, Director and Chief Investment Officer at Max Life Insurance. Mihir, good to have you with us here. Almost a little bit of consensus. I mean, I think it's an overused word, consensus. But for what it's worth, the view which is emerging is that maybe we are set for a bit of a relief rally. And why not? At least year to date, the market here has done very poorly as compared to global markets. With no real big issues at home. Maybe growth at the margin has been slowing. Earnings revisions are still not turning up. But no big issues like what we've seen out there in the West. Do you agree with that view?
Yes, good morning. Relief rally seems to be the right way to summarize this. And, even in the US, after the Silicon Valley Bank issue, the way the Fed has backstopped the liquidity and the deposits means actually it's kind of a stealth quantitative we can say quantitative easing, so to say. The Fed's balance sheet has gone up dramatically in the last couple of weeks post SVB, Silicon Valley Bank, and that also is adding to the sentiment. And we did see interest rates, come down even globally, which is some kind of a risk on kind of a sentiment at this point in time. So yeah, that's the way it is.
Okay, by the way, just want to mention a couple of more stocks. We're talking about IT stocks. KPIT Tech has really been the star of the show amidst all the volatility. It's one stock that has not given up on its rally. In fact, KPIT Tech today is at a fresh high. It's at 932, which is a gain of almost 35% this year. And it's a fresh 52-week high, and it's a 4% rally. So that's a 52-week high there. Apart from that, Ultratech Cement, KEI Industries, Godrej Consumers, a couple of other stocks that are sitting at fresh 52-week highs. Since we're talking about the IT names, Mihir, I wanted your thoughts here. We're heading, sort of full throttle into the IT earnings now in the next fortnight. What is your expectation this season, and how are you feeling about IT? Are you bullish, bearish, cautious?
I think IT is a sector where we are still cautious, underweight, and that's because of the fact that in spite of all the outperformance, etc., that we are seeing in the Nasdaq, IT services probably will continue to see the fact that the best is behind us. We try to club the Nasdaq along with Indian IT services, but if you see most of the FANG stocks, the big Nasdaq stocks, are all consumer-facing stocks. They are not really B2B. What Indian IT services cater to is B2B, and that corporate spending is likely to have seen its peak in 21 and 22. So to that extent, the kind of growth that we saw in the last couple of years is not going to get replicated. We would still rather stick to the domestic theme.
Still stick to the domestic theme. Any thoughts, Mihir, on this entire defense space? The flurry of orders for BEL seems to have done the trick. I mean, I think kept hopes alive that orders are not slowing or anything. And in government orders, obviously, right? I mean, it's a little lumpy sometimes, but orders have come through in large degree.
Yes, these were expected. I mean, I'm sure somebody was just waiting to sign some files. It seems to have happened at the last day of the year. So this is in line with the government's initiative to continue to ensure that we get more and more production done domestically. And both the public sector and private sector defense companies should continue to benefit.
Okay, big moves coming in over there. Garden Reach Shipbuilders, Cochin Shipyard, all up over 6%. What else do you like, Mihir? You said you're still a bit cautious on the IT sector, but any other spaces that attract you now? Anything where you see both valuation as well as earnings headroom?
Sure. So the private sector financials and even a couple of public sector banks are quite well poised on a growth versus valuation parameters. So those are the spaces that we are positive on. Local capex and local investment and infrastructure theme is also something that we are positive on, and that includes construction, engineering, capital goods, and of course some of the defense names. And the PLI linked sectors, some of them including chemical, specialty chemical companies, are spaces where we see secular growth. I think the broad theme is that this year is going to be a year of uncertainty because of local and global factors. So we are not taking huge bets on sectors and stocks, but rather trying to pick opportunities as and when they come on stock specific or sector specific calls. So it's more of a pick and choose strategy rather than very skewed portfolios.
Look at Policy Bazaar. Policy Bazaar, the PB FinTech saw a large move on Wednesday, and I think it's starting up about 4% once again. For the week, it's up some 11-12%. That is a PB FinTech on your screen, 3.5 this morning, 644. But it's not a sort of new age sort of stock move like what we're seeing out there in defense. Nykaa, for example, is down 7-8%, so it's very specific. Paytm also, by the way, has come up in the last 2-3 weeks or so. Stock started rallying even before this entire PPI, UPI news came through. Mihir, have you increased exposure to banking names, large private or public high quality banks in the correction that we've seen?
Yes, a little bit. But as I said, in terms of sector calls, we are not taking huge sector calls because of the uncertainty in the market. So I would say that we have reduced the risk in the portfolio related to the benchmark, but we are going more and more stock specific.
Oh.
Mihir, what about cement? In the month of March, I understand, the second half of March, demand was waning. Particularly post-Holi, we didn't see any kind of traction on the ground, which was surprising actually because otherwise demand was shaping up well. Prices, though, have been disappointing. However, I've checked out with various industry participants, and come the first week of April, the price hikes are likely to come about. Unsure whether they sustain. How do you approach this space?
See, valuations in this space are quite okay, except for a couple of stocks which are on the expensive side. So valuations apart, I think industry keeps trying that. They keep trying to compensate for volumes by hiking prices. And if the market's good enough, they stick. But in general, to your theme of slowdown, one of the reasons why we are a little bit, de-risking ourselves, not taking huge bets is the fact that, as you rightly mentioned, not only in cement, but across sectors in the last month or so, we are seeing some signs of even consumer discretionary demand slowing down. So to that extent, we are trying to kind of make sure that we get it right and not get stuck on the wrong side. In case the slowdown persists, then we might have to take a relook at the stance. So as of now, we're going with a neutral to cautious kind of a stance.
Just one more word on the defense names. Both defense and railway stocks, actually, all of them are up and about. In case you've missed out on this rally entirely, right? I mean, I was talking about how RVNL has doubled in the last 1 year. Cochin Shipyard is up 6%. BEL has done exceptionally well. If you missed out on this rally entirely, is there still more scope to go?
See, this seriousness with which the government is approaching domestic manufacturing is here to stay, whether it's in railway or defense. And if we think that defense indigenizations can go from 60% to 75% or even larger, and similarly the way the railways is almost tripled its expenditure in the last 3-4 years, I think the government is hell bent on making sure that we do things domestically. And we have seen that typically, once the ecosystem in a particular industry develops, then even exports become more competitive. In the defense space, for example, also, we are already seeing traction in exports. So once we have a critical mass, once we have economies of scale, then the whole world becomes your market. And to that extent, these themes might be multi-year themes.
Okay, multi-year themes. All right. On that optimistic note, Mihir, thanks a lot for joining and have a great weekend. And there are, of course, there'll be many opportunities in future to speak. So until we speak again, have a good one. Well, for the market, looking pretty good, actually. 200 points almost on the Nifty now, 700 points on the Sensex, and the Bank Nifty is the one that's getting that added push up almost 1.5%. But let's talk to the management of TTK Prestige. The stock has seen an 11% slip in the last 1 month. When we spoke to the management last, they said that they are witnessing a mild slowdown in consumer demand. To get a sense of how business is looking, we are joined by TT Jagannathan, the chairman at TTK Prestige. Mr. Jagannathan, good morning. It's not just your own industry, but several consumption-related industries are facing a bit of a slowdown now. And with the monsoons, in all probability going to see weakness, things could perhaps get worse before they get better. But your thoughts on how things could shape up for your own industry?
I don't think you're right. As a matter of fact, we had a reasonably satisfactory year, the year ending 23. The year ending 22, we had a fantastic year because everybody was shut down at home, couldn't go on holidays, couldn't go eating out. So we got a large share of the wallet. That, of course, changed in the year ended 23, but it will come back in 24. I'm confident that you can't keep on going out and keep on having holidays. So that share of wallet will come back to consumer demand.
What is the current demand situation on the ground compared to when we spoke last?
Yes.
No, my question was, what is the demand situation on the ground?
Oh, I'm sorry, I didn't hear you. It is better than what it has been last 2 quarters.
What about exports, Mr. Jagannathan? Are they even better? Because I think last time you were on, you were saying that there's so much demand, we're not able to keep up. So what we're doing is logically diverting some of the local production to exports. Could you talk to us about that? Yeah.
I maintain that.
Mm-hmm. It's equally strong. No.
Yes.
Okay.
If anything, it's getting stronger.
Oh, good. So, and Mr. Jagannathan, exports is 5 to 6%, right, of your total mix?
Currently, it is, yes.
Okay,
but it's likely to be 10% next year.
Oh, in FY24, it goes from around 5% to around 10%. Got that.
Yes.
Since we're talking about FY24, what kind of a guidance are we looking at? You have hinted in the past that volume should be in mid-single digits, revenue could be in double digits, and margins will be in that band of around 15 to 17%. Holding on to all those three?
I'm sorry, I can't give guidance.
But a brief idea, sir. Double-digit revenue growth should be gettable going by the current demand scenario?
Yes.
Double-digit revenues and margins, mid-teens is what you have said in the past. Now, input costs have cooled down even more. So, 15 to 17%?
Yes, that is correct.
Okay, 15 to 17% on margins. I want to understand a little bit about what the way forward could look like, not the here and the now, maybe over the next 1 to 2 years. What would the expansion plans be? Because I understand that you're expanding into non-South markets in a big way. Would you be taking on some big capex plan? What is the expansion that you're looking at over the next 12 to 18 months?
We are a national player. We've not just got north to non-South now. We did that 20 years ago. Point number one. Point number two, we have invested huge amounts of money in capex. So we've got enough production capacity to last us for the next 5 years, except in exports.
So for exports, what would the plan be in terms of capex?
We are building on it. It depends. Every day there's a new order coming in. So we have to adjust to see where we will put the capex and what is the time frame and all that. We have not yet decided that.
So the reason I ask is because you have over 800 crores of cash on your books. How much of that are you looking to utilize in capex, expansion? Would you use that for any other purposes?
No. We are planning capex for the year ended 24, 75 crores, and that will come out of cash generation.
Mr. Jagannathan, you also told us you are very close to an acquisition. Around 500 crores was the size. You said you'll do it this year. So maybe a little unfair on my part to ask you so soon again. But it's
No. It's still work in progress.
But, you know, Mr. Jagannathan, the reason we ask you this is the street is saying wedding season is very, very good. But we want to see TTK Prestige, celebrate the wedding in style. You said first half of the year may not be possible, but in this calendar year, it's doable, right? That inorganic growth that you've been talking about.
So you are absolutely right.
So in 2023, we'll see inorganic growth coming from TTK Prestige, and the ticket size could be that 500 to 600 crores.
I'm sorry, repeat that. I didn't get that.
In 2023, we'll see inorganic growth, the big announcement coming about, and the ticket size could be 500 to 600 crores.
Top line growth in 2023?
No, I'm asking you the ticket size of that inorganic growth that we're talking about will be 500 to 600 crores.
In 23, no. In 23, probably 50 crores.
No. Sir, the acquisition target is around 500 to 600 crores, right?
That is correct.
Oh, and in 2023, it will be announced.
No, 2023 is what, we've got one more day to go.
No, not the fiscal year, sir, calendar year. Before December 2023.
Okay, possibly yes.
Okay. Sir, I wanted to talk a little more about your margins. You said that margins will be in the range of 15 to 17%. Wanted to understand, are export margins better than domestic, and how does the breakup look?
It differs customer to customer, but the export margins are between 10 and 15%.
And domestic margins?
Will be between 15 and 18%.
Okay, so if the margins in the domestic business are higher, then there's no real reason to focus on exports at the cost of the domestic business, right? I'm just trying to understand whether in the longer term it makes more sense to just keep the focus on domestic.
That is correct, but additional growth will come only from export.
Okay.
And there's money to be made. I'm not giving it away free or losing on it. There's money to be made.
Sure. So on an average, what kind of export growth are we looking at?
We'll double next year.
Oh, okay.
All right, Mr. Jagannathan, we'll leave it there. It's always a pleasure, sir. Thank you very much for another interaction, and good luck. Thanks very much. Well, 184 points is where we are at on the Nifty, so things are looking good, aren't they? Just look at the Nifty Bank as well, and then maybe we'll take that break. Nifty Bank is up about 1.33%. It's come off a little bit from the high point of the day. Not so much. I mean, unlike the Nifty, which is still kind of pushing it, almost at the high point. Defense is still the name of the game this morning. BEL, BDL, Garden Reach, Cochin Shipyard. But you've got a few other names which have come into the mix. KPIT Tech, if you can have that name up, it's got huge volumes. It's up about 4.33% gain, 934. You've got the Adani names I mentioned. Adani Wilmar is the one which is there amongst the top volume names this morning. VA Tech Vabag is up 8%, 363 on that one. Jain Irrigation, big mover on Wednesday. Nimesh had highlighted this name on the D-Street Chatter on Wednesday. It's up another 6% this morning. GR Infra, that is a contractor basically, it saw a very large move on Wednesday. New orders have come through. It's up another 6% this morning, 1,032. Big beaten down since the listing day. You know, off and on I can spot these sugar names which are also higher. UTI AMC is another one which is up about 4.5%, but volumes are still very, very lackluster. Overall, it's a good-looking screen. We'll take a break. Ashok Kajaria of Kajaria Ceramics now joins us on the other side to talk about their business outlook, as well as, of course, the recent correction in oil prices, how it impacts them. We'll also have the management of GE Shipping to discuss their business, how are shipping rates looking as solid as before, or things are looking a little weaker based on the global outlook. Back into with both those conversations.